Good morning, everybody, and welcome to today's Monday morning mortgage update. My name is Sean Woolen with the Woolen Mortgage Team here at Waterstone, and we've got some updates for you. So, last 3 weeks has not been kind. I'm going to jump right in and share kind of what's happening in the markets. The biggest thing that we've been dealing with, which is a thorn in our side, is the Iran war. So this thing seems to just vacillate back and forth. We've got an agreement, we've got a ceasefire, and then all of a sudden there's more war, there's more fighting, back and forth with the Strait of Hormuz closing. And it's just not a good recipe for having lower mortgage rates. So here's a little breakdown I put together on what's happening with the Iran war and how it's impacting mortgage rates. First off, the Strait of Hormuz, it's a 20% of the world's oil goes through there. That's a big chunk. And as that gets stopped, the flow of oil slows down, the cost of oil goes up. Higher oil prices means higher gasoline, higher transportation, higher manufacturing costs, utilities, everything goes up. That's inflationary. That leads to higher prices for everything. Guys, oil is the blood of this earth. It keeps this economy going. It keeps everything going. Everything is oil based, everything. So when we have higher oil costs, that's a problem. So it's huge issue for inflation. And of course, mortgage rates are a directly impacted by inflation. Inflation is the enemy of mortgage rates. So now we have a little bit higher rates this week. So hopefully this Iran war, today we had some somewhat good news. I don't know what to believe anymore with Iran. They just don't seem to follow any type of agreement, or they're not really very trustworthy as far as what they say and what they do. But we'll see what happens this go around. Supposedly, we have a 60-day ceasefire. Oil has dropped today, which has caused us to get a little bit of a rebound. So let's check to see what that's looking like on the candlestick charts. This is the value of mortgage-backed securities. As this goes down, mortgage rates go up. So this is the 30-year universal mortgage-backed securities. As you can see, back in early July, if you look up kind of up this, we were at a peak. This is where I locked in most of the contracts that I had because the Iran war started up again. We had a ceasefire, everything was going great. And then, as you see, it was just a terrible downward spiral all the way down to this final Fibonacci level where we bounced off. Thank God we bounced off this just this last week on Thursday. And then Friday, we had a little bit of a rebound. And then today, a little bit again. We're trying to go higher. But if you look down here on the stochastic crossovers, this is the bought oversold versus undersold. We're way down here. We crossed over, which means we could go all the way up here. And when this stochastics move higher, that's good for mortgage rates. If you look back here in late June, we're really high up here, and that's where rates are at their good point. So we're way down here right now, and we need to push this higher. But this crossover that you see right here is a good sign. That means mortgage rates should continue to rebound as long as the news in Iran is positive. If you can see the 10-year now, it screamed higher. I mean, we were in the low fours. We went all the way up to 4.8 almost. I mean, it was kind of scary, but 4.7 and change. And luckily, we rebounded off today, and we need this to go all the way back into the range of 4.4, 4.5 to see rates trickle down a little bit more. So we are, look at this stochastic crossover, say that 10 times fast. Down here, we crossed over, which is a good sign. Anytime we have a crossover, that means the trend is typically lower for the 10-year. So we're going to keep that. Hopefully, we'll continue to see that come downward, and mortgage rates will follow suit. So as the 10-year goes up, so do mortgage rates. As the 10-year falls, so do mortgage rates. So here we are. Here's where we're at as far as interest rates go. Guys, we were in March 1st, we were at 5.99. We are 1% higher basically right since then. So it's all because of this Iran war. It is a thorn in our side. Hopefully it'll be over, but right now the trend is positive. We started out the day at 6.81 as the average. Keep in mind, this is for the perfect borrower. This is somebody with 25% down, 800 credit score, single family detached home, primary residence. If there's any hair on the file, meaning their credit score may be 700, this rate could be higher, or there could be points involved with getting that rate. 15-year, we're in the low sixes, 6.34 today. This negative right here, that just shows the day prior. It hasn't really been updated yet. That'll happen as the day goes. 30-year, we're close to 7% on a jumbo. So that's a little rough, but it is what it is, guys. And people continue to buy. And I keep telling people, use your negotiation skills. Let's get some seller credits. Let's buy the rates down into the 5s or low 6s because it can help and it will help. Adjustable rate mortgages are in the low 6s. FHA and VA are in the low 6s as well. So here's a little snapshot kind of where we're at as well. You can kind of see the chart where we were really low into the 2s and 3s, and then booyah, we went all the way up to the 8% mark back in October of 2022, 23, I think it was. That was bad. I almost contemplating getting into surfboard sales in Bali. But anyhow, we are rebounding. We're a little higher now, but hopefully after this Iran war thing, we will be over. But let's see what's happening this week because we've got a lot of economic data this week. Durable goods orders are today. Those are the big items, cars, appliances, that type of thing. How many orders are being done? We have a treasury auction today. Treasury auctions are basically how the United States, that's how we get money. We sell debt and people buy it and we give them a yield and we give them a return on their investment in the form of bonds. So those auctions help supply the US with money we're spending on everything else. If that goes bad, if nobody wants our bonds, then they have to raise the rates to make them attractive for people to buy. So hopefully bond auctions go well. That will keep our rates low. FHA home price index coming out tomorrow. That's actually been pretty strong. So that's interesting to see. I want you guys to keep a real close attention on the median sales price. It is lower, but that just means the average home sale price that is happening, the price range that's selling the most right now is the lower end, or the price range that's in the 3 to 4 to 500,000. The higher end homes are slower to sell. So the most of the homes are being sold right now are the lower priced homes. That's why the median home price has dropped. That doesn't mean that home values are dropping. It just means that the average price of home that's selling is a lower price range home. So we can see that because a lot of first-time home buyers are out there in the market right now, trying to get into that lower price range. And then we've got the manufacturing index. Consumer confidence is coming out tomorrow as well, and another bond auction for a 7-year treasury bond. Now the big week event, the main event, is Mr. Warsh talking about the interest rate decision. So there's been a lot of chatter, a lot of talk about should the feds increase rates to cause more pain, which would be better off for mortgage rates and housing in the late or in the like 6 to 12 months range, or should we keep it the same? So you heard that right. They are contemplating a rate hike. I don't think it'll happen. Most people thinking right now that, and the markets have priced in that there's going to be a pause, but we need to see inflation come down. We need to see oil come down. We need to see the PCE, which is coming out on Thursday, personal consumption expenditures. We need this to come in lower. We need inflation to come lower so mortgage rates can be lower, so pricing on homes can be cheaper as far as payments go, and we can get more people into homes. We do have some initial jobless claims and continued jobless claims coming out, as well as GDP on Thursday. And then on Friday, we've got the Bank of Japan doing what they're going to be doing with their Fed funds rate, basically. And then Chicago Purchasing Managed. And then we got some Reuters consumer sentiment. So we've got a lot going on this week. Obviously, Wednesday and Thursday are the ones that are going to be the bigger movers for rates. So keep your eye on that. And I think rates will get a little bit better this week. Hopefully this Iran deal will go further into a ceasefire, into a peace type event where the Strait of Hormuz will be opened, and then we can move forward from there. But I want to say thank you guys for joining today. We do have another thing I want to share with you today, though, but I want to go over the 1-year lender paid buy down. So this is something that's paid for by me, the lender. It's 1 year of a lower rate that's paid for by the lender. So if the sellers aren't willing to do it, we've got it. We can take care of that. So instead of getting a rate in the high 6s the first year, you'd be in the 5s the first year, and then it goes to the normal rate after that. So if you are looking to get a little bit of a discount the first year, let's talk about this. It's a great program. The sellers do not have to pay for it. The lender, this is the only one the lender can actually pay for, and we cover that for you. Now, also, we've got a fantastic program coming out here. This is the start of my podcast room. Yes, I have a new podcast coming out soon. And my son has all developed this for me and put this together for me. So we're going to make this beautiful. We're going to be hosting weekly podcasts to go over certain topics, Q&As with different people, get some professionals from across the industry, and just bring some more education on what's happening in the markets locally to you, and hopefully empower you and your buyers with information to help them make great decisions moving forward with real estate and with their mortgage solutions and strategies. So thank you again for joining us today, and we'll be sending this out today, the link, so everyone can share this with their customers and with their friends and family. And you all have a wonderful day. I will open it up for questions if you have any. If you don't have any questions, you can hop off. Otherwise, you guys have a wonderful week, and we will be in touch.